Hello everyone, welcome back. I got some really good ones for you today on this Thursday, September 28th, 2023. A lot's been going on with the markets and the economy, and that's what we're going to be focusing on for this evening's video. So welcome back, glad you made it, glad we could hang out together, enjoy this sunset, and let's dive right into these markets, shall we? We'll start with the 10-year yield in the bond market. We always start with the US bond market because it's the largest market on planet Earth, the mother of all markets, 3 to 4 times the size of the US stock market, 100 to 1,000 times the size of the crypto market, maybe 1 million times the size of the Beanie Baby market. You kind of get the idea. We start with the bond market because kind of like the dog that wags the stock market tail, the real estate tail, the Beanie Baby tail, the crypto tail, you kind of get the idea. So even if you're not into trading bonds, you're not a fan of bonds, which we don't like trading bonds in this channel, and we're not a fan of bonds here. At least I'm not. We still have to start with the bond market because that gives cues to, every other market on how to behave. So the 10-year yield right now hanging out at 4.57%. We've talked a lot in these videos about how if that 10-year yield moved up to say 4.5%, start to put downward pressure on risk assets. We're seeing it. So if you're bullish markets, you think stock prices are going to be moving higher, crypto prices are going to be moving higher, crude oil prices are going to be moving higher, then you're looking for that 10-year yield to start coming down from 4.57%. We'll call it to 4.35% in the coming trading days, weeks. If that 10-year yield can start to come down, that's the green light for risk assets to start moving up. On the flip side of that, if that 10-year yield keeps moving up, let's say in 2-3 trading days from now, it's sitting at 4.7%. Well, look out below for risk assets. So that's kind of your basic mechanism with the bond market and how stocks are kind of reacting to it. The 3 major U.S. stock indices, they don't like this 10-year yield all the way up there at 4.57%. Neither do these mortgage rates, interest rates, all these derivatives of the dollar getting stronger in relative terms, not absolute terms, but relative terms when compared to other countries' currencies on planet Earth. That kind of dollar strength really starts to put downward pressure on risk, and you're kind of seeing that. Moving on to the stock market, the 3 major U.S. stock indices. So the S&P 500 right now hanging out at about, closing at 4,299, so about 4,300. The NASDAQ hanging out at 13,201. Dow Jones closing today at 33,666. Oh, 666, the mark of the beast. Fun fact for you, the S&P 500 bottomed at 666 during the housing crisis of 2008. That was the intraday low, the mark of the beast. I don't want to get too into numbers having meaning, but 333 is something I see everywhere. I don't know why. Everywhere I look, 333, check the time, 333. And then 666 is always kind of, freaked me out a little bit. A spooky number. But anyway, moving on. Crude right now hanging out, crude hanging out right now at 91.79 a barrel. Guys, I think crude is on its way to over $100 a barrel for WTI crude. Like this year in 2023, at some point this year, we're going to break above $100 a barrel in crude. And then ultimately, I have a $150 price target on crude oil, but I don't think crude would hit 150 till 2024, 2025 maybe. So we'll just kind of have to see. Not a buy or sell recommendation, but I do see crude moving substantially higher, and then inflation with it because, everything I'm wearing right now is a petroleum derivative. The sole of your shoe is a petroleum derivative. That plane that you hear overhead is doing a month's worth of your carbon output just on takeoff. So, these people that you hear in the videos flying around, that's all energy intensive work. To build the plane was probably tons of crude oil, tons of coal, and to keep the plane flying, tons of crude oil. Not a lot in terms of solar and wind, you guys. These renewables, and we'll talk about it at the end of this video, they're not cutting it. This environmental social governance, this ESG policy that the government, Biden administration is trying to put us on, it's terrible energy policy because we don't have the infrastructure set up to accommodate a bunch of solar and wind. Now, I like solar and wind where it works. I like geothermal. I'm not use finite energy sources that are dirty as heck. I'm not going to be acting like an oil baron on this channel, but I will say The renewables aren't really cutting it, and I'm covered right now, head to toe in oil. You might even be thinking, oh, well, the chain's not oil. Yes, it is. Mining is the most energy intensive work you could possibly imagine. You know, when you're mining for gold or silver, we're talking about those big dump trucks where one tire is taller than me, you know what I mean? And those things are running on diesel. So crude, as it moves higher, the thousands and thousands of petroleum derivatives you use every day as products, like this pen made of plastic, my socks, the soles of my shoes, this polyester shirt. You know, it's just, if I had balm in my hair, you know, some hair products are water-based, but a lot of hair products are oil-based. You know, there it is. I'm head to toe oil. I have fossil fuels inside my body, which is pretty gnarly. But think about it like this: we were able to quadruple our crop yields since the 1980s because of oil. Because oil gets turned into fertilizer. So, you know, without oil, you wouldn't even be eating. And we're trying to turn off the oil spigots, only buying from other people, and then trying to pivot into these renewables that only comprise barely 12.5% of our energy mix, guys. And that's what's sending crude higher and higher and higher. You know, the strategic petroleum reserve, pretty well depleted. You know, Biden unloaded the strategic petroleum reserve during the midterms to kind of temporarily bring gas prices down for that election. Well, you know, he's used that up. I'm not here to get political, guys. I'm not left or right. I really do think all politicians are just plundering our country, destroying our country. You know, some of the people that are running the tables today, like Glitch McConnell and Nancy Pelosi, well, you know, I knew about them. You know, they were working in DC when I was in third grade. You know what I mean? So it's just, it really is just power structure, left or right. It doesn't really matter. It's the same people printing $1 trillion a month. You know, it'd take Mitch McConnell on a senator's salary. It'd take him 28,000 years at a senator's salary to have the net worth that he has today. So I wonder where he got all that extra money, you know what I mean? So if I ever talk about like energy policy or politics, like, try to understand that I am centrist about a lot of things. You know, I really like solar where it works. I like wind where it works. I like nuclear. I really like geothermal, but nobody else does. So go ahead and look up geothermal. So yeah, crude is getting kind of out of control, but I think we're going to move a lot higher. And I think in the next, 2024, 2025, we'll be at $150 a barrel for WTI crude. And that's going to put everything we use, buy, the gas we need to fill our cars, up another, 20%, 10, 15, 20%, something like that if we hit $150 crude, so look out. Watch for that inflation, It's so convenient that they strip energy and food out of the CPI, the Consumer Price Index, because that really is the inflation rate, but they don't want you to know that you've been living with double-digit inflation since 2020, since the CARES Act, when they added 40% to the money supply. Oh my gosh, guys. If I didn't laugh, I'd cry kind of thing. But anyway, moving on. We got gold right now hanging out at $18.64 an ounce, silver at $22.87. So gold below $1,900 an ounce, tentatively, if you want to do a little stacking, knock yourself out. Same with silver down there in the gutter at $22.87. Price-wise, I'm a little bit more attracted to silver here, but I would only ever stack physical. I would never buy mining stocks or mining derivatives. The only mining stock that I would consider, and we talked about it on this channel, is stock ticker CCJ, Cameco. They have 15% of the global uranium market. So, and they're in a pretty stable jurisdiction of Vancouver, Canada. The CEO of Cameco has also been running that company for decades. So, pretty good senior management. So if you wanted a nuclear play, you could look at stock ticker CCJ. They're mining uranium, but I would never buy gold or silver miners. And frankly, I don't like mining anything in general. I would just make that one exception for CCJ to give yourself a little nuclear in your energy basket. Or not, a lot of people, they really don't like nuclear, and perhaps for good reason. A lot of systemic fragility and risk with nuclear. When something goes wrong, it really goes wrong, and then it gets worse, so that's some freaky stuff. You got Chernobyl, 3 Mile Island, Fukushima, these are all nuclear disasters. And you might be thinking, well, we just need meltdown-proof reactors. Those were all meltdown-proof reactors, okay? It's always a meltdown-proof reactor until it melts down. So, you can try to be safe, but you don't really know what you're dealing with until you're dealing with a big problem, So I like nuclear tentatively. It's comprises 8.4% of our energy mix, and I would like to see that move a little bit higher. It's very reliable, cheap energy when everything's working correctly. Also, for waste, doesn't create a lot of waste. You could fill kind of like, a little box like, that high and that wide after like a month of supplying energy to a whole city. The output, the waste really isn't that much. It's very dangerous, but it's really not a whole lot of waste, and it can be reused, which is really interesting too. So they can reuse nuclear waste. So I think, guys, nuclear is pretty clean, pretty green, but it's those risks part. You need a highly specialized society to do it. You need very educated people working real hard, not falling asleep at the wheel with nuclear. So if you can pull it off, it's amazing. But if you have a problem, you got a really, really, really big problem. As opposed to what they're working on now, cold fusion, which is actually kind of meltdown proof. It just kind of dissipates whenever it has a meltdown. So if we ever crack cold fusion, that would be pretty awesome. Really what that is the star. Okay, so the sun that's going down right now, that's a fusion reactor. It's turning hydrogen atoms into mainly helium atoms, but it also, if it goes supernova, it's how gold gets created. That's funny. You might think gold, little flakes of gold, that gets created by some geological process on Earth. Absolutely not. The only way you can create gold is when a star goes supernova or two neutron stars collide with each other. It takes a lot of energy to push out a bunch of gold, So all the gold on planet Earth and silver, it's here. It was brought here from asteroids and the planet kind of forming itself over billions of years, depending on your origin story. I'm not trying to tell you that Genesis or whatever isn't real, hold on to your religion and your origin story. But all the gold all the gold here has always been here. Getting the idea. There's no new gold. All right, there's no process that creates the new gold. That's what makes it such a deflationary asset. We're running out of easy to find gold. All the high grade gold deposits have pretty well been mined at this point. It's getting kind of like with Bitcoin, it's getting harder to find that stuff. So unless we unlock asteroid mining, guys, there's a lot of asteroids that are loaded with gold, silver, and platinum, and if we could mine that, we could drop enough gold supply on the market here to really destroy the price. Like we could pull, bricks and bricks of gold from outer space, but we don't have the technology to do that, and it's going to be a long time before we're doing asteroid mining. So I like gold at 1864. I like silver at 22.87 an ounce. If you're into that kind of thing, I like stacking physical, and if not, whatever. So we got a U.S. government shutdown looming. Guys, I'm not going to give that the time of day. I'm not, because, just like the debt ceiling a few months ago, I came out here and told you they're just going to raise the debt ceiling. They're just going to come up with 4 trillion extra fake dollars and paper over the problem. I view government shutdowns in a similar way. It's like, cool. Well, the senators and congressmen who've caused the shutdown, they're still getting paid. If we didn't let them get paid, there would be no shutdowns. We're probably going to avoid the shutdown. And if we don't, we'll be shut down for a couple weeks. They'll come up with a few fake trillies to kind of get bureaucracy functioning a little bit more smoothly and efficiently. They'll come up with the money somewhere, right? And, we're going to carry on with the plan of life. So not really worried about a U.S. government shutdown. And then ChatGPT, positive developments for ChatGPT. So provides current info with links and sources now, as opposed to only being good up till September of 2021. So positive developments for ChatGPT. You should definitely check it out. It's free to use. Give it a whirl. Let me know in the comments what you think of ChatGPT. So that's really all I got for you guys for right now. We can linger, though, for a minute on energy policy. So 79% of our energy right now in the U.S. is coming from non-renewable sources. Coal, oil, these dirty, finite energy sources. And then we have 8.4% to nuclear, kind of as we discussed, and then 12.5% for renewable. Here's kind of my perspective on it, you guys. Over the course of our civilization's evolution, we've gone from like wood, which is not that great, burning wood for energy, not that great, to coal, a little better, but to oil, even denser. So, the natural evolution of civilization has been to use denser and denser and denser energy sources. And if your civilization is growing, keep this in mind, your energy needs are infinite. Now we're getting to a point with ESG where they want to cut off the oil and make us use diffuse energy sources like solar and wind. These energy sources only work if the grid is really designed to handle them. They're only ever going to be variable. So if it's a cloudy day, your solar's not going to work. If the wind's not blowing, your windmills aren't going to turn. You know, they're diffuse and they're variable. So you're going to need to go with non-renewable energy for a baseline load, like to have energy, reliable energy all the time. You're going to need to use oil, coal, natural gas, nuclear. But if, say, it's sunny and windy that day, well, I hope one day we can have an energy portfolio that's able to efficiently feed that solar and that wind into the grid. So there will be times where we can't use solar and wind, so we're going to use the dirty stuff. We're going to use oil, we're going to use coal, we're going to use nuclear. And then there's going to be days where we're not really going to need to use those. We can keep those on the back burner as, just in case kind of thing. And then we can use solar and wind. But the problem is we need to diversify the energy portfolio, and we need a grid that can handle that, So we need solar, we need wind, okay, we need geothermal. Biofuels too. If you want to burn coconut shells and toot around the town, that would impress me, So anything to spin a turbine, you guys, would be wonderful. But the reality is if you're driving a Tesla right now and you're tracing a line around your vehicle going, see, there's no carbon output coming out of this, I'm healthy for the environment. Well, let's trace from that vehicle to the charger all the way, to the grid that's charging that Tesla, and you'll find that it's running on coal or non-renewable. 80% of the time, non-renewable sources are what's charging your Tesla. So if you bought a Tesla to try to save the environment, well, you're charging it with coal, you're charging it with oil. But I do like where your head's at, and things are ultimately going to keep moving that direction. I do believe that. EVs, I do believe there's no stopping that. And I've heard Teslas are a riot to drive. I don't drive a Tesla, but I've heard really, really good things. People that own Teslas don't have a lot of bad things to say about them. So I think they're great vehicles. I'm a big fan of Tesla too, as the growth stock, and I like Elon Musk. But just when it comes to energy policy, we're moving the right direction, but nowhere near quick enough. As discussed, renewables only make up 12.5% of our energy portfolio. So, we're still 80% non-renewable, you guys, and we don't have really the infrastructure. We're not really ready to pivot and put all our energy needs on wind and solar and these renewables. And so while we're not ready to make that pivot, we're already turning off the oil, trying to buy it from other people, and that's really what's driving up energy costs. Germany led the way. You can look up Angela Merkel. She led the way in energy policy as far as going solar and wind. But Germany pays the most per kilowatt hour on the planet. So you're going to pay for it if you're switching to renewables when really your grid's not designed for it, your infrastructure's not there for it. You're just going to end up needing oil anyway and then paying a lot more for it. So that's kind of what's going on with energy policy. Total dumpster fire. And then on the flip side of that, Trump would like to drill, baby, drill, as he's been saying. So, we'll see. That plane flying overhead, that's doing a month's worth of carbon output on takeoff. So if you're one of those people that you really are a good custodian of the planet, you're an environmentalist, you want to keep the planet clean, well, you're doing a really good job Monday through Friday, and then you hop on the plane and undo all of it, So be realistic, guys. We're very hypocritical as Americans with our energy policy, because we're like, we want to lead the way in renewable. Okay, well, we're the biggest consumers on the planet. We're not leading the way on renewable. If you decide to lead the way on renewables, you're going to pay the most for it. And if you really want a higher standard of living, we want to drill. You want to drill oil, because if we were to dump a bunch of oil onto the market, prices of oil would go down tremendously. Gas prices would go down, and then all those petroleum derivatives you buy every day, like this little shirt, would go down with it. So, if you want cheap gas and you want real economic growth and you want a high standard of living, the last thing you want to do is turn off the oil and then bet it all on renewables, especially when, again, it's barely 10% of our energy mix right now. You know, I wish it were 99% of our energy mix and we only put oil and hair products and paint, but the reality is 80% of your standard of living, it comes from non-renewable energy sources. And if you want to change that, your standard of living is going to take a massive hit and you're going to pay for it. So, you know, I'm with it. I want to get away from dirty energy sources. I wish I had a free energy machine that could just spin that turbine and we could all have abundance and not even have to work. But we got to live in reality, guys. And really, if you want inflation to come down, you're going to want to drill oil. So for worse or for better. So that's really all I got for you guys for right now. I hope this video finds you doing well. And we're just going to carry on with the plan of life, okay? Till next time.